I want to get your sense on how investable do some of the Chinese tech stocks look at this point, given that now we are seeing major downgrades for U.S. tech.
Well, certainly the Chinese tech sector, the companies we hold within, say, KWEB, our China Internet ETF, have already really been beaten down over the last 2.5 years. So from a pure valuation perspective, you'd argue U.S. equities are still at the very high end of their historical range. At the same time, China, as well as broader emerging markets, are at the low end of their historical range, and particularly the tech plays like within the China internet space. So we think that there is an opportunity from just a pure valuation perspective. Maybe the Chinese shares, since they've been beaten down so significantly already, can weather some of this global turbulence we're seeing on central bank activity.
Right. And if that's the case, then where would you look at within Chinese tech, actually? Would you go for the e-commerce names, the likes of Alibaba, which have been hammered, or would you look at some of the small and mid caps?
Well, I think the entire space has really been pushed down in aggregate, that this has really become a little bit more of a beta play. There's not been a significant amount of alpha or price dispersion within the space. So I think this is where, owning the basket as in aggregate is a good play. We like the e-commerce plays. I mean, obviously we have Singles Day coming up on the horizon, but we also think you're going to see a lot more policies geared to raising domestic consumption in China after the Party Congress, that Chinese exports will slow in the coming months as global stimulus is pulled, as higher rates across central banks globally. It's going to weigh on the world's factories. So we believe that the Chinese government really has to raise domestic consumption to offset some of the weakness we're going to see within the manufacturing sector.